All right, so we will get started. So welcome to today's webinar. Really exciting topic for me. I think it's something that has been discussed off and on my entire time at SoFi related to student loan forgiveness. And when the announcement, came through a little while back, as a financial planning nerd, it was like my opportunity to like nerd out and figure out like, okay, what are the ins and outs related to forgiveness and some of the other pieces of the announcement. And then more importantly, recently, we kind of took the viewpoint of like, okay, how can we get information out there? So number one, people know what they're eligible for, whether it be the extension on the payments, the forgiveness, the new income driven repayment. And then from there, like, okay, if we have student loans left, like what's the next best thing that we should be doing moving forward before payments kick back in? So that's what we want to cover today. A little bit of background before we get started. My name is Brian Walsh, and I lead the financial planning team here at SoFi. I am a certified financial planner. Nothing I talk about today should be like considered financial advice, though. Think about it, high level education, guidance, things like that. If you do have like specific questions where you're like, okay, here's all my information, what specifically should I do? You can always schedule a complimentary call with one of our financial planners, which is the team that I lead. Also, important to keep in mind, like we're going to be talking through stuff today related to student loans, related to student loan forgiveness, all these types of things. So like number one, it's important to keep in mind, like we're going to talk about the high level rules and things like that related to how to qualify for student loan forgiveness, keeping that in mind. And then anytime we talk about student loans, one of the options for student loans that could be a very valuable planning strategy, sometimes it may not be the best planning strategy, is related to things like refinancing. So it's not always going to be a one size fits all where it's always the best thing, it's always the worst thing. It's really going to depend on your unique situation. So you got to weigh those pros and cons before making that decision. So I think I got the legal stuff taken care of. Now for the meat of today. So today we're going to break this down into three sections and then answer as many questions as we can. And I see we already got some great questions rolling on in. So first off, what I want to do is start by just like establishing a baseline so everyone is aware about the recent announcement by the Biden administration related to student loans, kind of what the key parts of it are, who it may affect, who it may not affect, things like that. Then we'll move on because, as I mentioned earlier, it's like, okay, we're going to have different aspects coming into play between now and January. For a lot of people, though, I think the last estimate I saw was like 25 million people, even after forgiveness, they're still going to have federal student loans. And then there's also people with private student loans. So it's like, okay, what do we do next? And what things should I consider? And we always want to kind of understand the differences between different types of student loans, the pros, the cons, as we make those decisions. And then lastly, kind of go through a high-level framework on how to think about analyzing student loans. It's actually the framework that we've been using on the planning team for a few years now. It's also used in a digital tool that we built to kind of simplify the decision-making process of saying, okay, I'm looking at a student loan. How can I try to figure out the best thing I should do with it, depending on the type and all these other circumstances? And then we'll hop into Q&A. Cool. So get things started off with an overview of the recent announcement by the Biden administration. So when the announcement was made, it really kind of broke down into three key parts. And I think forgiveness has taken over a lot of the news stories, but there still are two other important parts of the announcement. So the first part of the announcement was the pause related to payments, what is extended for the final time through the end of the year. So that way payments would then kick back in January of 2023. That was the first part. The second part of the announcement was related to student loan forgiveness. And that's related to forgiveness of up to $10,000 if someone had not received the Pell Grant, and up to $20,000 if someone had received the Pell Grant, assuming they were under the income thresholds. And the income thresholds of 125 for single, 250 for married filing jointly. There's some student loans that are included in that. There's some other kind of smaller use case ones that were not included in that. And then the third part of the announcement was related to a new income-driven repayment option that is being added. That is ultimately going to be, I mean, objectively, I think it's more generous than existing income-driven repayment options. So for those of you who aren't familiar with income-driven repayment on federal student loans, it essentially caps your payments to a certain percentage of your income. And for the new income-driven repayment option for undergraduate student loans, it's capped at 5% of discretionary income. Graduate student loans, it's capped at 10% of discretionary income. And then they also kind of reduced what would be considered discretionary income. So it kind of had a double whammy effect on payments under the new option, and then forgiveness after a period of time with interest being subsidized along the way. So we'll dive into those a little bit more later, but those are really like the three big things that came out of the announcement by the Biden administration a month or two back. So kind of diving into some of the details on this, like when we put this together, we wanted to kind of address like, hey, what are the questions that we're getting over and over and over again, because this is what's top of mind for people. And, you know, related to the amount, it's up to $10,000 with no Pell Grant or up to $20,000 with a Pell Grant. And it's important to keep in mind here, this is a Pell Grant. So it's not saying, you know, you had to get a Pell Grant every single year. It had to be a certain amount, none of that. It's just, did you receive a Pell Grant? It's kind of like a yes, no type of question to distinguish between the $10,000 cap for forgiveness and the $20,000 cap for forgiveness. The next question is related to like, okay, we got the point here. It's like either 10 grand or 20 grand, depending on the Pell Grant. But then really kind of like the threshold for qualification is based on income. And it's $125,000 for single, $250,000 for married filing jointly. But that begs the question, like, okay, what is income? And that may sound like a silly question to ask, but it is an important nuance to keep in mind, because what it's doing is it's looking at adjusted gross income from 2020 or 2021. So because this was related to the pandemic, it looked at those years. So as long as your adjusted gross income, which I'm pretty sure is line 11 on your 1040, don't hold me to that, but it's right around that ballpark area. If your adjusted gross income was under the threshold in either 2020 or 2021, then you would kind of check that box and you would qualify. The other thing to keep in mind related to the forgiveness is, you know, not all loans qualify for student loan forgiveness. The big ones that qualify, looking at direct Stafford loans, direct subsidized, direct unsubsidized federal loans. The key ones that kind of came out recently since between the announcement and right now is, you know, two different categories, and that would be FFELP loans and Perkins loans that are held by commercial lenders. Those would be the big category of student loans that would not qualify. And then also private student loans. This is only for federal student loans. As we kind of go through this, and I'll share the application and kind of talk through the process here in a minute. But with this forgiveness, whether you get $10,000 forgiven, $20,000 forgiven, that amount of either $10,000 or $20,000 will not be taxable at the federal level. There are a handful of states that will be taxing this, but from a federal level, this is not taxable. So that is important to keep in mind. And also, lastly, before we hop into the application and kind of talking through that, is the application recently launched. So you can go in there and you could fill this application out and you can get the ball rolling on it. Olivia, if you could dropped in. It's studentaid.gov/debt-relief/application. And you know, when the application first came out, I reviewed it. I'm like, oh wow, this is a very simple and quick user experience. maybe I'm the only person that thinks about things like that. But if you go to that link, you would essentially fill in some like basic high level, like demographic type information, like your name, social security number, date of birth, phone number, email, things like that. And then essentially what you're going to do on that second part is going to be, it's going to review the qualifications related to income in order to be eligible for student loan forgiveness. And you are checking the box, essentially self-certifying, typing in your name, kind of signing that you're self-certifying that you qualify for that. Ultimately, what's going to happen is they are not requesting documentation for everyone. So everyone who fills out the application isn't going to have to submit like their tax returns from 2020 or 2021 or anything like that. What they're going to be doing is they're comparing it to data that they have on their end, and they're testing that out. And then they are also verifying a statistically significant enough of them going ahead and requesting the documentation to verify that you're eligible. So you go through this process. There'll be a good amount of you on this webinar today that this is your process. It's like scrolling through. It's super quick, a couple minutes. And then there'll be some of you on the call. I can't guarantee that, but statistically, there'll probably be some of you on the call where you get a request for additional information, as well as how to provide that information and that documentation related to eligibility. So that's a big part related to the forgiveness, the extension of the payment pause through the end of the year, and high level related to income-driven repayment. So what we found is it's like, okay, we go through this forgiveness process, and it's something that we've been waiting on and looking forward to for a long period of time. But there's still gonna be a whole lot of people that have student loans left. And a lot of those people with federal student loans haven't been making payments on their student loans, their federal student loans at least, for almost gonna be 3 years by the time payments kick back in January. So we're having a lot of conversations on like, okay, how do we think about what's next after forgiveness? So the first place that we start is, I think it's really important to start by analyzing and appreciating the type of student loan that you have. So at a high level, like we look at things and it's kind of like, okay, you have federal student loans and you have private student loans. Now, like federal student loans, we look at it, it's like, okay, the process started with the FAFSA, and generally speaking, it's from a needs-based perspective. And, the great news with federal student loans is it's not like going through the application process of like other loans where it's like, okay, income, free cash flow, credit score, stuff like that. It's a much simpler process to get the money and qualify for the money in the loan. The downside or upside, depending on how you look at it, is the interest rate on federal student loans is set by Congress each year based on when that loan was taken out. So whether you have, let's say a perfect credit score or you have a horrible credit score, it's the same interest rate based on when that money was taken out and the type of loan that is set by Congress. There's also borrowing limits on federal student loans, which is, to be honest, the primary reason that private student loans come into play throughout the college experience, because people normally kind of like, okay, here, I'm going to get my federal student loans. It's going to be this much of the way. I still got like this much left. They cap it off with private student loans and other sources of funding. It's important to keep in mind too, with federal student loans, you have federal benefits. Prime example would be the forgiveness, the pause on payments. But before that, there's federal, and beyond that, there'll be federal benefits like income-driven repayment plans. There's also additional forgiveness programs like public service loan forgiveness, stuff like that. On the flip side, you have private student loans. And private student loans would be very, very similar to any other type of debt. The eligibility, the rate, the terms, all that stuff is determined by the lender going through the application process, looking at things like income, credit score, free cash flow, stuff like that. The interest rates are going to vary depending on that, depending on the qualifications of the borrower, whether or not it's a fixed or a variable rate. So there's a lot more variety when it comes to private student loans, and they do not come with federal benefits. That's really one of the key differences is those federal benefits related to forgiveness, income-driven repayment, certain deferment and forbearance policies. Private student loans do not come with that. One of the big things that we're talking through now is as people are looking at restarting their payments, let's say all of your federal student loans were not forgiven, and you still have federal student loans left. One option that people have been exploring is like, okay, if cash flow is really tight, because to be honest, we're working with people who are dealing with high inflation, all this other stuff, and they haven't made payments on these loans in almost 3 years. And they're like, okay, how do I fit in my budget? There are different options that we're going to talk through. One option that we come across that's available with federal student loans is income-driven repayment plans. So there will be 5 income-driven repayment plans that will be available. The 4 are the top 4 of like the existing ones that have been in place: revised pay-as-you-earn, income-based repayment plan, income contingent repayment plan, and then the new income-driven repayment plan. This is something that, a lot of times analyzing this decision on if income-driven repayment makes sense comes down to your loan balance, your income, your family size, and then quite frankly, the ability to repay this loan and fit it into your budget. For people who are focused more on their current cash flow, it can be a potential way to kind of like minimize those payments. It may mean paying more over the long term, but it can be a way to minimize those payments. So as you're kind of going through this process, that new income-driven repayment option was the third part of the announcement. And I would argue probably the most impactful part of the announcement, both from a borrower perspective as well as from a total cost perspective, if you look at different budget estimates. And lastly, before we kind of talk through the framework and how we kind of think about like, okay, how do we analyze our student loans, figure out what's next, all that fun stuff, is really a lot of it comes down to looking at federal student loans and weighing the pros and the cons. And all federal student loans have the same pros and cons, like they're consistent across the board. It's just sometimes people appreciate more than others. So generally the pros and the positives with federal student loans would be there is payment flexibility, especially for people that make certain amount of money and have a certain loan balance. There can be much more flexibility related to lower payments to fit them in the budget. Beyond the broad forgiveness that is happening kind of as we speak, there are also other forgiveness programs, the most common of which would be public service loan forgiveness, where if you work for a qualifying government organization or a 501c3, it's 120 months worth of qualifying payments while you're employed at the organization, and then the balance would be forgiven without tax consequences. And then lastly, this doesn't really apply if you already have them, but they're easy to qualify for. There's not like the underwriting standards like you have with private lenders. The downside of federal student loans is once you kind of pass a certain income level, and that varies based on your balance, the kind of the lower payment option isn't really there as much, because if it's based on your income and you make this much, your payment's going to be higher than if you make this much. So once you reach that certain threshold, then that doesn't really become, that benefit isn't necessarily valuable to you. Depending on your income-driven repayment plan, it may lead to like ending up accruing more interest over the life of the loan. That's not as much of a concern with the new income-driven repayment plan, but with the 4 existing ones, that could be a concern, as well as the fact that if the loan is forgiven beyond a few years from now, and it's not public service loan forgiveness, that forgiven amount would be taxable. And then lastly, one of the biggest cons that we ultimately come across is the fact that the interest rate is uniform for everyone taking out the same type of loan in the same given year. So generally speaking, people who have a strong borrowing profile, that I guess would probably be the easiest way to look at it, with income, credit score, free cash flow, like they aren't necessarily rewarded for that in a lower interest rate, like they could potentially be rewarded for that with a private student loan. And then next step, as we kind of go through this and we say like, okay, we know if we're eligible for forgiveness or not. We kind of, we understand the process. Setting the baseline with the key differences and the considerations related to federal student loans versus private student loans. The next step is really kind of just going step by step and saying like, okay, what's my next best course of action for each of the loans that we have? And I say each loan for a reason. Generally speaking, I think it's best to look at each loan one by one. I understand that could be a pain in the butt because before I refinanced my student loans, I think I had like 16 different student loans or something crazy like that. But if you look at each one by one, then once you get done, you say, okay, this is what I should do with these. They'll start bucketing together. But it really is valuable to look at each loan by one to making sure you're making the best decision based on the information. So kind of the framework that we use for making this decision, as we're looking at each loan, we start by looking at the basics of saying like, okay, what type of student loan is this? Is this a federal student loan or is this a private student loan? Again, going back to what we talked about for the last 5-10 minutes, federal student loans come with federal benefits, private student loans do not come with federal benefits. And that's an important consideration as we evaluate the options, because if we're going to lose federal benefits by, let's say, refinancing or something like that, we have a higher bar to really kind of jump over before we say like, yeah, this is a solid move. If it's a private student loan, we don't got to worry about it. Then it becomes a much simpler analysis and discussion. The next thing that we look at after the type of student loan would be looking at type of employment. And again, this really matters when it comes to federal student loans, but we generally like bucket it up. Like, are we working in the private sector or the public sector? And the main reason we're looking at that is related to public service loan forgiveness, because that's certainly something that we would want to explore and dive into the pros and the cons if it is an option based on not only current employment, but then planned future employment, because we do got to hit that 120 qualifying period, 120 months. I probably should just say 120. Third, related to the things that we'll look at and kind of the factors would be affordability. And it's looking at saying, okay, for federal student loans, once we have to start making payments on them in January, for private student loans based on the current payments, and looking at it and say like, at a high level, is the current payment affordable? And we kind of have like two ends and like a gray area. Like one end would be like, no, it is not affordable. Like I don't care what I cut out of my budget, like unless like I don't have a place to sleep, I don't have a car to drive to get to work, like I am not going to be able to afford this. The other end would be like, yeah, I don't like making my student loan payment. I'd rather spend it on something else, but it fits in my budget. I'm able to pay the rest of my bills. I'm good to go. And then barely would kind of be like somewhere in the middle where it's like, okay, I can make these payments on my student loan, but it causes me to make some, sacrifices in other areas that are like fairly difficult sacrifices to make. And I guess everyone would kind of quantify that differently, but it's kind of looking at like, hey, how affordable is this payment? And then lastly, as we're kind of thinking through the best decision for a student loan, we would look at it and we say, okay, like high level, what's my goal with this student loan and my approach to tackling the student loan? Because everyone's going to have a different goal, and no goal is good or bad. It's just different. Some people we come across, even though they can afford their student loans, they're like, hey, my goal is to reduce my payment. My focus is on minimizing what I pay now. That may mean that I pay more down the road over the life of the loan, but there's things I want to do with my money, so I want to minimize my payment right now. Some people are like, hey, I just want to pay less interest. Like, I'm cool with the timeline it's going to take me to pay it off. I'm cool with my monthly payment. But if I can make it more efficient and pay a little bit less interest or a lot less interest along the way, I want to do that. And then lastly would be there's people who aggressively want to get out of student loan debt and pay the least back as possible, like to pay it off sooner. We've seen some people who are like, their goal was to aggressively pay off a huge amount of student loan debt in a really short period of time. All three of these goals are okay to have. It's just figuring out what your goal is, because what your goal is should determine like how you approach it. Like generally speaking, if you had a pay it off sooner goal, you wouldn't be like, hey, I'm going to do income driven repayment because that's going to last potentially 20 years. So how we kind of bring this together is we'll walk through this step by step as far as number one, like let's say we're looking at federal student loans. And then number two, we'll like walk through this kind of framework saying we're looking at private student loans. So looking at federal student loans, like we'd start off, we'd be like, okay, what type of employment is it? And again, public employment, both current and like reasonably expected for the future. No one truly knows what the future has in store, but reasonable expectations. If it's public, we end up looking and say, okay, let's explore public service loan forgiveness, because that can be a very powerful tool that you may have in your toolbox to use as far as paying off student loans. If it's private employment, then we just move on to the next question and we go to affordability. Generally speaking, if affordability is an issue, where if like it's like, nope, definitely can't afford it, or yeah, I can barely afford it, we would look at a few different options for federal student loans. Number one, if affordability is really an issue, and your income's above a certain threshold, we would say, okay, is forbearance an option? The next one that would probably be a little much more common would be exploring income-driven repayment, which is again where your payments are capped to a certain amount of your discretionary income or your income in general. The third option we may look at is consolidation. Essentially, consolidation would be, let's say you have a handful of federal student loans. There's a program, direct federal loan consolidation. You pull them together. You're not saving money, or you're not lowering your interest rate. You're kind of consolidating your life, simplifying your life, but you can adjust your repayment term. And if you make it longer, your payment can get smaller, but you'll pay more interest over the life of it, but that's an option. And then lastly, we may look at refinancing with a private lender, where let's say someone has, really strong borrowing profile and they can lower their interest rate, and that interest rate may be able to lower their payment if they stretch it out. So again, if affordability is the concern, forbearance, income-driven repayment, consolidation, or refinancing. If affordability is not a concern, then we would pretty much kind of move on to the next category and the next step. And that's where we kind of look at, okay, if it's less interest, then we may look at, okay, can we refinance to a lower interest rate? And how much lower is the interest rate? And is that worth not having federal benefits if I needed them down the road, or if I want to use them down the road? Or hey, if it's paid off sooner, we would look at either making extra payments on a federal student loan, or refinancing it and trying to lower that interest rate or kind of shorten that repayment period. I think the interesting thing with the less interest and the payoff sooner is a lot of times what we end up seeing is people underestimate the impact of small changes. Like for example, I was reading through an example yesterday, writing up an example yesterday for a card in the SoFi app. And it's looking at like, okay, if you even had a 0.5% lower interest rate on like a $50,000 loan over the course of 10 years, like it's going to end up saving thousands of dollars. So even like a 0.5 percentage point difference of interest rate, depending on how big that balance is, can really add up. So that's why we tend to explore these different options. All right, so now we'll shift gears and kind of walk through the example looking at private student loans. Private student loans, quite frankly, are much simpler as we're looking at from a planning perspective, because you don't have to worry about federal benefits. That doesn't factor in the decision-making process. So we don't even worry about employment. We just look at affordability and goal. So for people who have private student loans, if affordability is an issue, we would consider, okay, do we have to do forbearance, which there's going to be some downsides with forbearance, or can we potentially refinance the private student loan and maybe stretch out that repayment term? Maybe instead of paying it off in 5 years, we pay it off in 10 years or 15 years. Again, the longer the repayment term, you're going to have a lower payment, but more likely than not, you're going to be paying more back over the life of the loan. If affordability is not an issue, then we would pretty much look at maybe refinancing if you can get a lower rate to save some money on interest while keeping everything else the same, or maybe even making extra payments on student loans, because as you make extra payments, that'll chip away at the principal faster, help you pay it off sooner, help you pay less interest over the long run. There really is, I think, from a private student loan perspective, people always ask, like, hey, can you refinance private student loans like that were already refinanced? Like, the answer is yes. Some companies have some like time restrictions, like it can't be within like 90 days and stuff like that. But generally speaking, you have the flexibility with private student loans because you're not losing those federal benefits, where it's like, okay, if it makes sense, let's check the rate and let's see if we should move forward with it. So that's really the framework that we use when we're solely looking at, student loans. It kind of going from step to step, whether it be private student loans or federal student loans. The last thing I want to touch on quickly before we transition over to questions, which we got a ton today, which is awesome, is really kind of reiterating the idea of like, okay, student loans are important. That's the point of today's webinar. Completely get it. As someone who actually I still currently have a student loan, I get that it's a big part and a big focus. But there's also a lot of other things that go on with personal finances, and we want to make sure that we kind of keep perspective. So what we did is we started building out this framework as we're talking about personal finances. Like at the end of the day, we encourage people to focus on like one thing at a time and focus on the most important thing at a time. Sometimes that one thing is aggressively paying off student loans. Sometimes that one thing is paying off credit card debt. Sometimes that one thing is investing for the future. What we try to encourage people to do is we don't want them to kind of like skip steps where they get so focused on, let's say, student loan debt that they ignore other foundational things like credit card debt or emergency savings or investing for the future. So kind of the way we look at it is like step number one is like, do you have a safety net? 1 month's worth of expenses set aside in cash. If the answer to that's no, then that's what we tend to focus on. And we kind of structure our decisions around that. If the answer is yes, we kind of move on to saying, okay, are you taking advantage of an employer match? The next one would be income protection, disability insurance and protecting your income for everyone, and then life insurance if someone else relies on it. After that would be moving on up to tackling bad debt, building a cash cushion, full-blown emergency fund, 3 to 6 months worth of expenses, then investing, and then paying down good debt. And the reason I bring this up is because one of the common mistakes that we may come across with people who aggressively pay down their student loans that would be relatively low interest rate, 2, 3, 4, 5%. They may do that at the expense of investing for the future, which could create some problems down the road. Perfect. So now we'll transition to questions, and we got a bunch in here. But if there are any more, feel free to toss them in the Q&A section. Oh wow, there's a ton. Okay, first one up. Can you apply for forgiveness if your child has not graduated yet? Yes, this does apply. The student loan forgiveness does apply to current students. So it just would have to, the loan would have to be from this past spring semester and before. Thing to keep in mind for current students, the income threshold will be different depending if they're a dependent or not. If the current student is a dependent, that income threshold of 125 and 250, that would go based on parents. If the current student is not a dependent, then would go based on their current income. So that's like the one quirk to keep in mind. Okay, answered the current student one. I have FAFSA, but never applied for a loan. Can I apply for a loan for next semester and still get the loan forgiveness? No. This current loan forgiveness is for loans dispersed before the announcement was made. So if you don't have any federal student loans, then you would not be eligible for the forgiveness that we're talking about right now. Let's say public service loans forgiveness could still be an option if that would qualify. But yeah. Okay. Oh, there's specific loan types. So there's a question related to like specific types of loans, whether or not they qualify. One of those being FFELP. That one is going to be, it's going to be depend if it's held by a commercial lender, or let's say if it was consolidated before the deadline that they provided. So that one will be on the fence, depending on if it's already consolidated and you did that a while back, then that should be all set. But if it's with a commercial lender, then that's creating issues for people right now because they're not allowing the consolidation process to make that eligible. That kind of changed, I don't want to say halfway through the game. It was like they did the initial announcement in, what was it, mid-August. And then after the initial announcement, like it's not, every single scenario wasn't fleshed out when they announced everything. They started adding details and adding FAQs and things like that along the way. That was one of the nuances that was unfortunately for people added along the way. How do I contact a person for individual counseling? So you can talk to a financial planner. If you have the SoFi app, or if you log into your SoFi website, on the website, you log into your SoFi account. If you go under member benefits, there's an opportunity to kind of schedule an appointment one-on-one. Also, Olivia, if you could drop the link in there for sofi.com/SoFinancial, you could use that as well. Loan forgiveness apply for a master's degree. Yeah, grad loans are eligible, assuming it's a federal loan. So it applies for both undergrad and grad degrees. Okay. My loans were originally federal loans, but I consolidated them and refinanced to have one monthly payment at a lower rate with a private loan. This means I'm not eligible for forgiveness. Correct. Unfortunately, if you refinanced your federal student loans to private student loans, then that means they are not eligible for student loan forgiveness. And so that's just kind of how they didn't carry that forward. It's essentially, that's why as we kind of go through this process, it may have seemed like I was like harping and like stressing on like the difference between federal and private. That just tends to be something that I would rather overemphasize. Because federal benefits can potentially be a big deal for people, and we want to make sure that they're fully aware of what comes and doesn't come with federal loans versus private loans. Do the plus loans include parent plus loans? Yeah, for federal loans, yes. Sometimes private loans get termed as parent plus loans, but they're private loans. Private would not qualify, federal would qualify. Yeah, another question. I'm sorry. Like, yeah, federal to private, out of luck. Not that it should make you feel any better, but I refinanced my federal student loans as well years back. So I understand where the questions are coming from and probably where the frustration is going to come from too, quite frankly. If I received a Pell Grant in my first year of college, but not the last 4, would I still be considered for up to 20 grand? Yes, it is if you received a Pell Grant. No qualifications that I've seen as far as how many times, all that fun stuff. So based on that, you received a Pell Grant. So that would be the up to 20 grand instead of the up to 10 grand. Do you know if the 125K income threshold includes equity-based compensation, or is that cash income only? Ooh, good question. It depends. It's based on your adjusted gross income for 2020 or 2021. Depending on the type of equity compensation that you have, that may or may not be included. I'll give one example, RSUs. So if your equity compensation was restricted stock units, then as you vest in those restricted stock units, that counts as taxable income. So it flow to your gross income, which would then flow down into your adjusted gross income. There may be, ISOs, for example, as you vest, that may not create a taxable event depending on what you did with them. So just going back to the taxes, it may or may not have, depending on the type of equity compensation. Loan forgiveness, gross or adjusted gross, 2020 or 2021. Do you have to be working to qualify? No, you don't have to be working. You could be recently graduated, like this example, current student. The key thing to be remembering there, though, is dependent or non-dependent, because that'll determine whether or not it goes based on your income or your parents' income. Okay. 35 loans to move. Good question. I'll term this differently. If you have FFELP loans held by a commercial or private institution, can you consolidate them under the federal option if you haven't done it already and then be eligible? The answer to that, unfortunately, is no. That was, I think, a couple weeks back. There was a point in time where at one point the FAQs on studentaid.gov provided this type of scenario, and it was like, oh yeah, you consolidate them before you apply, yada yada yada. And then like the next day or like 2 days later, it was like, no, if they're not consolidated by this date, then you would not be able to consolidate them and then have these forgiven. So if it's not done yet, based on my current understanding of the rules that were updated, the answer would be no. You would not be able to consolidate them and then be eligible for forgiveness. Receive the Pell Grant. Does it matter when you received it? No, it doesn't matter when you received it. Could be a long time ago, short time ago, 1 year, 4 years, anything in between. Yeah, another question about refinancing federal student loans to a private student loan. That would not be eligible for student loan forgiveness. Next question. I was able to pay off my loans right before I graduated in May 2022. Am I still eligible to be refunded? Correct. Or correct, question mark. I gotta learn how to read questions. I sound like Ron Burgundy in Anchorman. So during the course of the pandemic, from March of 2020 through the end of the year, payments on an overwhelming majority of federal student loans were not required. You could make them, but you didn't have to. And if you made them, it went to automatically reduce, the principal. So some people made them all along the way. If you made those payments when you didn't have to and you paid off your loans and you're eligible for forgiveness, then you are eligible for a refund of the amount of payments you made up to the amount of forgiveness that you're eligible for. So let's say it was 10 grand and let's say you're eligible for $10,000 worth of forgiveness based on not receiving a Pell Grant. Just making it up, not saying that's you. And you made like $5,000 worth of payments during COVID when you didn't have to, then you'd be eligible for the refunded amount of $5,000. I have a senior in college who graduates in May 2023. Should he apply for this now? Yeah, I can't see why not. I don't think there's any benefit that I can think of in waiting to apply. The reason I say that is because if you are eligible now, you're going to be eligible in a year because it's based on 2020 or 2021 income and the disbursement date of the loan taken out before this summer. So in my mind, I always take the attitude when it's related to finances of like, okay, if there's no benefit in waiting, why wait? Because the only thing that can happen is things can change, you forget about it, stuff like that. So it's kind of one of those things that if there's not a benefit to waiting, I'd probably just take care of it sooner rather than later. I was joking. Sorry, Olivia, I'm going to put you on blast. She was joking with me. She's like, oh man. She's like, should I fill out the forms? And I'm like, yeah, I would have filled out that thing the day it came out. I'm like, just because I was like free money. So yeah, I would do it now rather than waiting. Okay. So you don't currently have an FSA ID. The good news is, so the link that that was dropped in there, the studentaid.gov /debt relief /application actually doesn't require an FSA ID in order to fill out the application. You'd basically be filling out like your information. So you don't need the FSA ID. That was actually when the announcement first came out, I'm like, holy smokes, how many people are going to remember their FSA ID? I'm like, I'm a financial nerd and I don't remember mine. And it's hooked up to my old Hotmail email address, which probably dates me a little bit. But you don't need the FSA ID in order to fill out the application. Yep, another question about optional payments during the course of the pandemic. And yeah, if you made optional payments, then you can, that would be eligible to be refunded as long, like up to the threshold that you'd be eligible for. Okay. Next question, is there a way to track your application through the review process? Honestly, that's a good question. And I'll admit, I don't know how the tracking process is going to work, just because I haven't gone through the process and I haven't followed anyone along the way through that process. So yeah, that's a really good question. Another question about refinance a federal loan back. I don't want to say back in the day, but before, not eligible if it's a private student loan. Is a parent loan included on the forgiveness? Yeah, assuming it's federal, then yes, it would be included in there. Has there been information released on on how the 20 grand would be applied if you have different loans than the amount? Okay, yeah, so it's basically like if you have like a bunch of different loans, and let's say like how is this gonna be divvied up? There is a process. You don't get to choose what order it's going to go in. It basically gets kind of like a prescribed order, where it essentially it starts with looking at any loans that are in default or past due. Assuming that's not the case, then it would move on to the next criteria is looking at the interest rate. So it would go from highest interest rate to lowest interest rate. And then if all interest rates are the same, then it would move to subsidized versus unsubsidized, with unsubsidized going first. And then if all that's the same, then it would go based on date, oldest to newest. And if that's the same, then it goes on balance. So they have like a formula that they'll use, but at a high level, probably the one that's going to apply the most is going to be based on the interest rate from highest to lowest. Quick question on does SoFi have any deferment forbearance policies? Yeah, so there is a way, like if you're experiencing let's say financial hardship and you have a SoFi student loan, then you would want to reach out to our customer service team and kind of go through the process. I'm not involved in that process, so I don't know the ins and outs and the details on how it works, but I know you can go there and they can help guide you along the way. Oh, they're moving on me, sorry. Okay, some similar questions that I answered. Yeah, so there's a couple questions related to refinancing federal student loans and the private student loans, and questions on like timing of when that happened. It does not matter when you refinance from federal to private. If it's private, it's not eligible for the forgiveness. So whether it's a week ago, a month ago, a year ago, 5 years ago, doesn't make a difference, unfortunately. Okay. There's a question. Sorry, it's a longer question. I'm just reading it and now I'll hit the highlights. Uh, okay, a question on related to current income versus past income related to thresholds. So I guess again, go back to it's 125 for single, 250 for married. Looking at adjusted gross income, and it's looking at 2020 or 2021. So if you met the threshold in either of those years, then that's what's going to be like, okay, that's the bar I need to hop over. Or I guess it would be hop under because you want to be under 125 or 250 in either 2020 or 2021 for adjusted gross income. If it's higher than that right now, that's not of concern because it is based on 2020 or 2021. So it sounds like you would be unlocked. Yeah. So there's a question. She has a daughter that's an undergrad student graduating next year. And she made some income. Whose income would be considered? It depends if she's a dependent or not. I'm assuming dependent based on how the question is worded. So if your daughter is a dependent, then it would go based on your income. If your daughter is not a dependent, then it would go based on her income. But just the way that it's worded, I'm assuming dependent, so it would be based on yours. Okay. If you have multiple student loans, do you have to apply for each one or one application cover it all? So it's like the application is on like a per person basis. So like let's say I was filling out the application, I would fill it out and it would be for me and I'd enter in my information and it would be applied based on the like the pecking order that I just talked about a few minutes ago for the federal student loans in my name. So application is per person. You don't have to fill out more than one application for different loans that are in your name. Is there a deadline to apply? Yeah, I think I'm not for sure on the split date. It's like a year and a half from now. But I guess I'll just reinforce the point. Like the eligibility it should not change from today versus if you waited 6 months or a year, whatever it may be. That probably just bracking that out. I think the other thing to keep in mind too, like you fill out the forgiveness application. Doing it now, how the process is going to work is you apply for forgiveness. You go through studentaid.gov, they apply and everything. They get in touch with their loan servicer. Your loan servicer is going to process this. And if you have a balance, they're automatically going to re-amortize your payments. And what that means is, let's say you have a balance of 20 grand and now you get 10 grand forgiven. Now your balance is 10 grand. Your payments will be reduced compared to what they would have been before the forgiveness happened because it gets re-amortized automatically. So waiting, especially if it's not going to forgive your entire amount, really doesn't serve any benefit because you would get the reamortization once the forgiveness gets processed. So I like that would be another reason outside of just like the fact that when people wait to do things, sometimes they forget and you could be passing up some free money. That could be another direct financial like ramification of waiting because it will get reamortized. Okay. Yep. Parent loans. Good. We answered that one. What factors should we consider when thinking about refinancing private loans? The key thing for me when I'm looking at private student loans is depending on what my goal is. A lot of times private student loans is like, okay, do I want to lower my interest rate or do I want to lower my payment? And with private lenders, like for SoFi example, you can do what's called a soft inquiry, where you could check your rate and see what your payment would be, what your interest rate would be, depending on different terms, without actually getting a hard credit inquiry that like temporarily dings your score. So it's like, hey, I'm just going to check it out to see what it would be. And if I want to lower my interest rate, is it going to lower my interest rate? Cool. Then I move forward with it. if I want to lower my payment, is the payment lower? Cool, then I move forward with it. So it really is like there's not as big of a threshold on whether or not it makes sense to refinance a private student loan. The exception I'll throw out there is, let's say if you're currently in the process of applying for other major debt, you may not want to like refinance debt. Like let's say if you're closing on a house in like a month or so, like you wouldn't want to refinance your debt this close to it because it could negatively affect whether or not you qualify for that new debt. But like outside of that, I think if it aligns with your goal, even by a little bit, then, generally speaking, even a little bit adds up over a longer period of time. Their question about like if you can direct where the forgiveness goes if you have multiple loans. No, you can't direct it. On one hand, like I'm like, oh man, I wish you could direct it because there are definitely some use cases to deviate from the formula. But on the other hand, I'm like, processing this is going to be crazy anyways. So the fact that they just have that predefined pecking order of how the forgiveness is applied is probably going to make this manageable, even though it's still going to be a crazy effort to actually execute all this. How we're being taxed when loans are forgiven, assuming we're talking about this forgiveness, federal perspective, no tax ramifications. State perspective, there's still a handful of states that are taxing this, and it depends on your state. So from federal perspective, no need to worry. Well, okay, I think we got time for like one more. Let me grab one that seems to be coming up more than once. Okay, there's a handful of questions related to timing of like current students and when they should apply versus not apply. And I think like some of these questions are coming from the perspective of whether or not they would be a dependent or not a dependent. It's going based on 2020 or 2021. So it's looking at like, let's say, I don't know, my kid was a dependent in 2021, and maybe he's not going to be a dependent next year. Should I wait till next year? It's going based on 2020 or 2021. So again, it goes back to the idea that like you're not going to be able to change what happened based on the rules by waiting. It wouldn't serve a benefit. So probably just move forward with it because the rules aren't going to change because it goes based on 2020 or 2021. I guess real quick, there's asking about if the presentation is going to be shared. We're going to be sending out a recording, so that'll have the information in there as well. Perfect. Well, I appreciate everyone tuning in. This was an awesome amount of questions. Like this is super entertaining for me to do this. Like, so thank you so much. And hopefully you got some valuable information out of this. And if you do have further questions, feel free to schedule an appointment with one of our financial planners. They can walk through your situation. And I hope you have a great rest of the week and a great weekend.